Hello everyone, welcome back to the channel. Today we're discussing an important development involving strategy, formerly known as MicroStrategy, and why some investors are beginning to worry about the company's Bitcoin accumulation strategy. For a long time, Strategy has been viewed as one of the biggest corporate supporters of Bitcoin. The company has built its identity around acquiring and holding massive amounts of Bitcoin, turning itself into a unique investment vehicle for people seeking exposure to the cryptocurrency market. However, recent events in the financial markets are raising new questions about whether this strategy could face challenges in the months ahead. The main issue centers around Strategy's preferred stock, known as STRC. Recently, STRC experienced a significant decline and reached its lowest level since it began trading. The stock closed at approximately $88.59, which is well below its intended 100 value. During the trading session, it even dropped as low as 82.50 cents before recovering slightly. This decline is attracting attention because STRC plays a very important role in how Strategy finances its Bitcoin purchases. To understand why this matters, let's look at how the system works. Strategy has been using various financial instruments to raise capital. One of those tools is STRC preferred stock. The company's goal is for this stock to trade close to its $100 par value. As long as the stock remains near that level, Strategy can issue additional shares and raise substantial amounts of cash. That cash can then be used to purchase even more Bitcoin. This model has helped the company continue expanding its Bitcoin holdings over time. Currently, Strategy owns roughly 846,000 Bitcoin, making it one of the largest corporate holders of the digital asset in the world. The company's entire strategy relies heavily on maintaining access to funding channels that allow it to continue accumulating Bitcoin without needing to sell existing holdings. The problem emerges when STRC trades significantly below its target value. With the stock now trading around $88 instead of $100, every new share issued generates less capital. In simple terms, Strategy receives less money from investors for each share it sells. That reduces the efficiency of one of the company's most important fundraising tools. But that's only part of the concern. STRC currently offers a dividend yield of approximately 11.5% annually. Maintaining those dividend payments requires a steady source of cash. Up until now, Strategy has largely managed those obligations through various financing activities, including issuing shares. Some market observers now believe the company may eventually need to increase the dividend rate if it wants to encourage investors to buy STRC and help move the stock price back toward its intended $100 level. While a higher dividend could attract investors, it would also increase the company's annual cash obligations. In other words, Strategy would need even more money to continue paying shareholders. This is where concerns about Bitcoin enter the discussion. Some analysts argue that if the company's ability to raise money through stock offerings becomes limited, Strategy could eventually face difficult decisions. One possibility is selling a portion of its Bitcoin holdings to generate cash. That scenario remains speculative for now, but it has become a growing topic of debate among market participants. Another factor contributing to investor concerns is the broader economic environment. Recently, Bitcoin itself has experienced periods of weakness, while the Federal Reserve has signaled a more aggressive stance on interest rates. Several Federal Reserve officials now expect the possibility of additional rate increases in the future. Higher interest rates generally create pressure on risk assets, including growth stocks and cryptocurrencies. As a result, both Bitcoin and Strategy-related securities have faced increased volatility. Adding to the discussion, some analysts point out that Strategy's premium relative to its underlying assets has narrowed considerably. This reduces the company's flexibility when it comes to raising additional capital through equity issuance. Because of these developments, investors are closely monitoring whether Strategy can maintain its current financing model without needing to liquidate any Bitcoin. Interestingly, Company leadership has previously acknowledged that selling Bitcoin remains an available option under certain circumstances. Management has indicated that if selling a portion of Bitcoin becomes more attractive than issuing additional shares, the company could consider that route. For now, there is no confirmation that large-scale Bitcoin sales are imminent. However, the sharp decline in STRC has highlighted potential vulnerabilities in the funding structure that support Strategy's Bitcoin acquisition strategy. As a result, investors will be paying very close attention to future developments, including STRC's price performance, Bitcoin market conditions, Federal Reserve policy decisions, and any comments from company executives regarding funding plans. The coming months could be critical in determining whether Strategy continues aggressively accumulating Bitcoin or faces new financial constraints that alter its approach. What do you think? Could Strategy eventually be forced to sell some of its Bitcoin holdings, or is this simply a temporary challenge that the company will overcome? Let me know your thoughts in the comments below. And if you enjoyed this update, don't forget to like the video, subscribe to the channel, and turn on notifications so you never miss the latest Bitcoin and stock market news. Thanks for watching, and I'll see you in the next video. This is not financial advice.